Good morning. Good morning, everybody, and welcome to the Beaufort Regional Chamber's 2021 Economic Forecast. I'm Ian Scott, President of the Chamber, and I am so excited that we will soon be able to gather safely in person for events like this. But I want to thank you all for joining us today. We have over 150 registrants signed up, and I can still see the attendee count growing as we begin our economic forecast this morning. We are so glad you're all with us. So the Beaufort Chamber has been hard at work over the past year, following months of outreach and a board retreat in July. The Chamber adopted a brand new mission statement, also a new vision. Our mission is to promote economic prosperity to enhance the well-being of everyone in our region. And we envision a thriving region based on a resilient economy today and for future generations. To achieve that mission and live out that vision, we've adopted a three-point work plan that we are implementing here at the Chamber under the leadership of our board of directors. And that's one, to support our member businesses with information, advocacy, connection opportunities, and marketing to help their businesses thrive. Number two, to strengthen and diversify the region's economy. And number three, to shape our future so that we have a bright opportunity for our kids and grandkids in the next generation. Today's event covers all of those objectives. We're bringing valuable information that members can act on. And we're bringing local context with that information we're bringing. We're highlighting pillar sectors of our economy and opportunities for new growth. And we're setting a data foundation to envision what our future can look like. All of those things are being achieved today at our economic forecast. We are excited you're with us to join. Today's event would not be possible without a bevy of partners and sponsors. I'd like to recognize all of those right now. First and foremost, our presenting sponsors, the Beaufort Jasper County Realtors, the City of Beaufort, and Wells Fargo Advisors. We also have a sponsor for the dashboard you'll see later today. That's BB&T SunTrust, now Truist. Our forecast partners, these are folks who've helped shape the content for today and also expand our attendee reach beyond just our chamber members. Those are the Beaufort County Economic Development Corporation, the Beaufort Digital Corridor, Beaufort Memorial Hospital, the Coppage Law Firm, the Hilton Head Area Home Builders Association, the Town of Port Royal, South Coast Cyber Center, Technical College of the Low Country, the University of South Carolina, Beaufort, and the town of Yemassee. I want to thank all of our sponsors and forecast partners for helping make today's event possible. And to get us started this morning, I want to hand it off to Chamber Board Member and presenting sponsor, Whitney McDaniel with Wells Fargo Advisors. Whitney.
Good morning, everybody. As Ian said, I'm Whitney McDaniel, and I'm currently serving my 6th year on the board of directors at the Chamber of Commerce. And I'm also, along with Katie Pfeiffer, a financial advisor at Wells Fargo Advisors on Scott Street here in Beaufort. We are very pleased today to sponsor this economic forecast. At Wells Fargo Advisors, we think it is extremely important to be aware of what's happening in one's economy so that you can better position for growth for your business and for your portfolios. Wells Fargo Advisors provides investment advice and guidance to help clients maximize all aspects of their financial lives, administering approximately $1.8 trillion in client assets through more than 12,500 financial advisors like myself. Locally, Katie and I are committed to helping the Beaufort community to prosper with our active chamber investment as members for the past 25 years. and serving on the Chamber's committees. You can also find us working hard in our communities, in our churches, alongside our neighbors, volunteering in the schools with United Way of the Low Country, Beaufort County Open Land Trust, Junior Service League of Beaufort, and Rotary International, just to name a few. As certified financial professionals, we stress the importance of accurate data and long-term planning for personal investment as well as community advancement. Some of the economic themes we're watching closely at Wells Fargo Advisors are long-term disruptors, such as artificial intelligence, digital pay platforms, supply chain troubles, rising interest rates, infrastructure spending, and potential tax hikes. Working with our team of economists, market analysts, and research providers, we assist our clients to set an appropriate and well-diversified long-term asset allocation. And we review it periodically to ensure that it fits with their investment objectives. Today, we're going to review a number of themes likely to affect our local and regional businesses, as well as our investment portfolios in the near and long run. Data that will assist us in evaluating the health of our local economy in the greater Beaufort area and develop a path forward to sustainability and prosperity. Because the strength of our region contributes to the economic strength of our nation and this world. But before we begin to plan our future, let's look back at our successes for just a brief moment. Enjoy this recap of investments, advancements, and achievements made by Chamber members and partners over this past year with the Beaufort Bright Spots video produced by SK Signs, Designs, and Marketing.
Thank you for joining the Beaufort Regional Chamber's Economic Forecast. Stay tuned for some great headlines you may have missed from 2020.
USC Beaufort is on the move. We've just added 2 new academic programs right here in Beaufort. The first one, marine biology. Where else would you want to study marine biology than right here in Beaufort? And we just brought in one of the nation's most prominent professors in marine biology, Dr. Mercer Brugler. We're also adding a whole new program in cybersecurity. Where else to have it but right between MCAS, Paris Island, and the Naval Hospital. We're real excited to have a new professor there, Dr. Dean Bushy, one of the nation's best cybersecurity experts. Man, this is happening at USCB. We have a mayor who's pro-USCB. We have a city council and a city manager who understand the important relationship between the community and the college. We have an entire community that wants us here, and that doesn't happen all the time in college towns. We've got an economic development authority right behind USCB, the Beaufort Digital Corridor right down the road. It's like we've got the bases loaded and a fastball coming right down the middle of the plate, and we are locked on it, and baby, we are swinging for the fences. And with a chancellor like Dr. Al Panu and a provost like Dr. Eric Skipper, watch out, don't blink. USCB is going to be rounding the bases real soon.
Over at the Home 2 Suites, we've been very blessed in the past year in 2020 to have a very strong occupancy and ADR throughout the whole year. That would not have been possible with my great team and staff members to make sure that all extended stay guests at our property were taken care of and left 100% satisfied.
Hello, I'm Chris Fisher, Glassworks SC, a new glass manufacturing company in Beaufort, South Carolina. 2020 has been an amazing year. We had an opportunity to bring in all of our equipment, have all of our workers safely with the COVID, and now in 2021, we're getting ready to open up in the second quarter of this year. Thank you, the City of Beaufort.
2020 was a great year for the True. We completed construction.
And we look forward to our grand opening in 2021.
Good morning. I'm Bob Bundy, the 2021 president of the Beaufort-Jasper County Realtors. That R stands for Realtor. We are more than agents and applications. We fight for property owner rights, and we are community advocates. Advocacy early last spring by the Beaufort-Jasper County Realtors and our allies succeeded in getting real estate-related services classified as essentials. This quick, proactive outreach meant that plumbers, electricians, landscapers, painters, legal services, insurance agents, appraisers, and other involved in the real estate industry stayed in business. It's a good thing too, for 2020 proved to be a banner year for the real estate sector. Showings and closings hit record highs last year, and average days on the market for home sales fell to record lows.
With the focus on the future, the Technical College of the Lowcountry is invested in expanding and adding in-demand health sciences programs here at the Beaufort Mather campus.
And thanks to generous support from industry partners, we recently launched a new HVAC program at our Bluffton New River campus.
2021 will also mark the grand opening of the Culinary Institute of the South in Bluffton's Buckwalter Place. This state-of-the-art 29,000 square foot facility will directly support and further elevate the Lowcountry's hospitality and tourism industry. The Culinary Institute of the South will also house the Foodseum, a one-of-a-kind food museum dedicated to the rich heritage of Southern food.
At Technical College of the Lowcountry,
we are proud to be stepping up
to the current and future needs of the communities we serve.
Hi, I'm Mayor Stephen Murray, and on behalf of the City Council and staff of the City of Beaufort, we want to thank you for coming to the Economic Outlook. We appreciate the Beaufort Regional Chamber of Commerce focusing on data-driven priorities to drive our goals as a community and a region. There's a lot to be proud of. A large number of private sector investment along the Boundary Street Corridor and other areas of our region, exciting initiatives moving forward like the South Coast Cyber Center, and diversification of our tourism effort. On behalf of the city, we want to thank you, our private sector community, for continuing to have confidence and faith of our region's ability to continue to be a remarkable place to live, work, and prosper. We look forward to working with you in the private sector, our nonprofit partners, and other governmental agencies to make 2021 and 2022 even more remarkable.
Apprenticeship Carolina chose to put an apprenticeship consultant here in the Lowcountry at TCL full-time due to the increased demand for apprenticeship as a workforce development tool. Since January of 2020, we have registered 9 new occupations, and we have awarded TCL over $61,000 in grant funding from the U.S. Department of Labor, and we look forward to an even more successful 2021.
Good morning from the Fort Frederick Naval Heritage Park. In Port Royal over the last couple of years, we've been investing in the outdoor lifestyle of Port Royal. And this is just one of the examples where Port Royal and Beaufort County can get together and we can allow you to come and visit the heritage of Port Royal and the Beaufort area. Some other areas that we've been investing in is the relocation of the Porter's Chapel. We've relocated that chapel to the Naval Heritage Park. That chapel is going to be used as an area where you can come and learn, and there'll be exhibits set up to show you the history of the Reconstruction era and what's happened in this area. The third thing that I want to highlight is the Cypress Wetlands. What an amazing place to come and see the outdoor, the nature of what's happening here in Port Royal. All of these projects in total is almost $750,000 investment in the outdoor living of the town of Port Royal and the wider area of Beaufort County. We at Port Royal look forward to you coming and visiting our town and spending time looking at these beautiful outdoor exhibits. Thank you.
The South Coast Cyber Center is a collaboration of the University of South Carolina Beaufort, the Technical College of the Lowcountry, the Beaufort Digital Corridor, and the Economic Development Corporation. That collaboration has been put in place in order to foster job creation, economic diversity, and create a cyber ecosystem here in the Beaufort region. We recently have been awarded a $1.3 million grant from the Department of Defense Office of Local Defense Community Cooperation. This grant is going to allow us to hire faculty, develop curriculum, develop courses, and jumpstart the cyber technology hub that we are going to create here in our region.
Construction and renovation is extremely strong in our area. We're hitting record numbers in Beaufort County across all communities. We're hiring a lot, and we need more. So the Home Builders Association has spearheaded many efforts to promote our industry through the younger generations and also through our professional women in building initiatives. We're excited for the upcoming year and the prolonged growth that this market has.
2020 was an opportunity for many organizations to step up, such as the Beaufort Regional Chamber of Commerce and the Beaufort Area Hospitality Association. They put a great step forward in hosting the annual Shrimp Festival in this past October, as well as the Oyster Festival this January. It gave opportunities like the Beaufort Inn. We did something we've never done but always wanted to test by launching our first ever garden party. And we had so much success in October and great optimism and feedback from visitors from around the area as well as our locals. We've decided to continue that tradition, and we'll start that again this March and continue it through May of this year. We are optimistic of what's happening in 2021 and look forward to more travel and tourism as it comes back to the Beaufort area.
2020 was a big year for the Chamber. We adopted clear new mission and vision statements to promote economic prosperity today and for future generations. We retooled our programs, deepened our partnerships, and instituted a bold new work plan focused on supporting member businesses, retaining the military, diversifying the economy, and shaping a brighter future. At today's economic forecast, we'll release the Regional Prosperity Dashboard. This important new tool will help make sure we are making progress on that brighter future for everyone in our region. It's just one of the ways the Chamber is working to support our member businesses and strengthen the region's economy. Thank you for joining us.
Hi, I'm Kevin Klingler, Chairman of the Beaufort Digital Corridor. The Beaufort Digital Corridor has continued to develop local entrepreneurial technology talent. One company in particular is poised to attract the funding necessary to fully develop their products, hire talent locally, and create a successful technology business right here in Beaufort. Gary Lang, the owner of Breakwater Restaurant, has spotted a gap in the retail point-of-sale software industry. Gary's company, currently called Ruler, will be the first company funded by the angel investment fund raised by myself from the Utah-based investment company, Just Start Go, which specializes in startup and early stage funding.
For us, the structure and support provided by the Beaufort Digital Corridor has been the difference from a business idea that would have very likely died over the challenges of the COVID-19 pandemic and a business idea that is now a business plan that is poised to be funded through their angel investment fund and enter the marketplace in the very near future.
We're very excited to be bringing the first technology startup in Beaufort to fruition. We believe more will follow and remain confident about developing a technology economy here in Beaufort.
At the Beaufort Economic Development Corporation, we're proud to be partnering more and more often with the Beaufort Regional Chamber of Commerce. In the 3 years we've been in business, we are nearing $200 million in investments, over 900 jobs. As we look to the future here, in Port Royal and in Beaufort, we have 3 projects coming out of the ground. Salt Marsh Brewery, Stoneworks is about to have a grand opening on Robert Smalls Parkway. And then we also have Perrin Woodworking, which is going to be a great addition to Port Royal. Out in Beaufort at the Commerce Park, lots going on there. We're going to be paving the park this spring. We have Magnus moving forward with the 64,000 square foot spec building. And we also have a grant. Over the last 3 years, we've attracted over $9.6 million in incentives and grants. Lots to be excited about. Let's work together.
So 2020 for Beaufort, Port Royal, and the Sea Islands saw our destination showcased by multiple publications. Whether it's Travel and Leisure listing it among the 11 best small towns in America, or again making the list of Southern Living's best small towns. We saw our area highlighted, showcased, and sent to the masses. We also saw some record numbers out at our beaches. That would be Hunting Island and its renourishment, our Fripp Island's extended summer that we saw this year with more and more folks and families discovering the island for the first time. We have high hopes for 2021 and beyond. We're excited about where our destination is heading, the leadership that's in place, and we look forward to bringing new experiences to our guests and visitors alike.
Hello. My name is Colonel Carl Arbogast, Commanding Officer of Marine Corps Air Station Beaufort. Thank you for inviting me to participate in the Beaufort Chamber of Commerce's Economic Forecast. Here at the Air Station, we are focused on providing top-of-the-line support for the Marine Corps' fixed-wing assets and the future of Marine Corps aviation, the F-35B. Over the course of 2020, Marine Corps Air Station Beaufort had 3 major projects ongoing. First, our primary runway, runway 523, was resurfaced last year. We employed approximately 30 people to use over 44,000 tons of asphalt to fix the runway at a cost of around $17 million. Secondly, we have been building a new hangar on the flight line. The F-35B requires more sophisticated support than our older hangars can provide, so we have been building a second F-35 hangar. This project employs approximately 150 people per week and costs a total of $89 million. We estimate a completion date of August 2021. And lastly, we are 50% complete with designing another aircraft hangar. This project is estimated to cost around $122 million, with construction beginning in March 2022. These are just a few of the projects in work on Marine Corps Air Station Beaufort, and we are proud to be a contributor to our surrounding economy.
At Beaufort Memorial, we're excited about opening the OKT Medical Pavilion, a 70,000 square foot medical office building to include our newest cancer center, the New River Cancer Center. We're excited about the Valentine's Ball and raising $260,000 for our OR renovations this coming year. At Beaufort Memorial, we're excited about our vaccination rate and trying to get back to the new normal in Beaufort County.
As you can see, 2020 wasn't all bad. There's a lot of progress being made in our community. Now, stay tuned for our 2021 economic forecast.
Good morning, Beaufort. As you can see from that wonderful video, we have many reasons to be optimistic about the future of our region. I'm Bob Bundy. I'm a realtor with Bundy Appraisal Management and also your 2021 president of the Beaufort Jasper County Realtors. I'm honored with the privilege of introducing our keynote speaker, Dr. Von Nessen. But before I do, I wanted to tell you about our association. Beaufort Jasper County Realtors is a nonprofit organization with just over 600 realtor and affiliate members serving Beaufort and Jasper counties. Our mission is to advance and encourage profitability for our members and to promote and protect home ownership, property rights, and the realtor brand through the highest standards of integrity and professionalism. In addition to our advocacy efforts at the local, state, and national level, we provide our members with education, professional development, and networking opportunities, and strive to keep them informed about the daily changes in our industry. We own and operate the Lowcountry Regional MLS, which currently serves over 750 realtors across the strait and provide members with the most current technological tools available. Our association and members do much more than facilitate real estate transactions. We believe in giving back to our community and support local organizations like Lowcountry Habitat for Humanity, Kappa, Toys for Tots, United Way of the Lowcountry, and the Beaufort Charities, just to name a few. As realtors, we also believe in the mission of the Beaufort Regional Chamber of Commerce, and we value the program and events that they facilitate for our community. The Chamber is an advocate for businesses, and they exist to promote economic prosperity in our region. So it is fitting today that they are hosting this economic forecast. And now on to what I'm truly here to do. Joseph C. Von Nessen, PhD, is a familiar name and a trusted voice for realtors statewide, specializing in housing economics and residential real estate. And he is actively involved with local branches of the Home Builders Association and the Association of Realtors throughout South Carolina. He is a research economist in the Division of Research at the Darla Moore School of Business, where he specializes in regional economics, regional economic forecasting, and housing economics. He has also been the lead researcher on projects for companies including Boeing, Michelin, Sunoco, Blue Cross Blue Shield, Savannah River National Lab, and the State Military Task Force. He earned his bachelor's degree in economics at Furman University and his PhD in the same field at the University of South Carolina. And it is with great pride that I now introduce to you Dr. Joey Von Nessen.
Well, good morning, everyone, and thank you, Bob, for that kind introduction. It's a pleasure to be with you all this morning and to debut this forecast today, as well as the economic dashboard that we're going to be talking about later this morning. Again, my name is Joey Von Nessen, and I am a research economist at the Moore School of Business at the University of South Carolina. And I like to describe what we do as so what economics. And I use that term half jokingly, but to always make a serious point, which is that we're always looking at economic data and asking the question, so what? How do these data apply? How do economic data help organizations make strategic decisions? Because that, at the end of the day, is really what it's all about. And so this morning, we're going to be going down two parallel tracks. Number one, we're going to be looking at more of a short run picture of South Carolina's economy and of the Beaufort economy, looking at what's been happening over the last year, how things have been changing, of course, as a result of the pandemic, and what 2021 is likely to hold for the rest of this year and going into 2022 as well. And then on the other track, we'll be thinking more long-term. And that's where we get into the dashboard, which we'll come back and talk more about later, where we'll evaluate what's going on and what's been going on in Beaufort over the last decade, what the economic trends have been, how they've been evolving, where the landscape sits today. And that will help us to think about the future over the next decade. What do those patterns and what do those changes imply about the competitive strengths and limitations of the region that then can be built upon as we move forward over the next decade. So two parallel tracks, but of course, first, we want to talk about what's going on right now, what we've seen over the last year and what the outlook is for 2021. So that's where we will start here this morning. And I think starting out, if we look at the economic data overall for South Carolina and for Beaufort, things look pretty strong right now. We're very optimistic about 2021. And when we look across the data, in many respects, we can say that we are almost back in terms of looking at overall economic recovery in South Carolina and in the Beaufort region. And one way that we can see this, the easiest way perhaps to see this, is to look at overall employment trends and employment levels in South Carolina, and really how they've changed over the last year or so. So this graph here illustrates employment levels going back to January of 2020. And you can really break down the 2020 South Carolina economy into three primary segments. The first segment here, as I'll highlight for you, illustrates the economic downturn, of course, due to the mandatory government shutdown back in March and April of 2020, where South Carolina lost close to 14% of its overall employment base. A very significant number, of course, and that translates to about 308,000 jobs. About 14% of the state's workforce was lost during that short period of time. But immediately afterwards, of course, as the economy began to reopen in April of last year, we saw what economists call a V-shaped recovery pattern, meaning that following a sharp drop off, we see a sharp rebound for that V shape. And that persisted throughout the late spring and into the early summer months, basically until around July 4th or the early July period. And then at that point, we transitioned again and moved to what economists call a U-shaped recovery pattern, which means you see that sharp drop off followed by a more slow and steady recovery and a much slower pace of growth. And that's really where we've been ever since then, ever since last July. So three primary phases in 2020, the contraction, the shutdown, followed by the V-shaped recovery pattern, followed by the U-shaped recovery pattern. And when we put all of this together, what does it show us in terms of the aggregate levels of recovery? Well, as I mentioned, it actually shows that we're doing fairly well in terms of recovery, and we have recovered to within approximately 4% of our pre-recession levels of employment that you can see comparing where we are today versus where we were 1 year ago back in February of 2020. So a sizable improvement over the levels of employment that we lost. Again, that 308,000 back in March and April of last year. But there's a very major difference here depending on the sector that we look at. And that's what I want to focus on next. And I think this slide is the best single visual that you will see that encapsulates the current health of South Carolina's economy. And the reason is that it very clearly shows you the difference between the two major industry sectors and how they are recovering. So on the right side of your screen, we can look at all industry sectors in South Carolina except for leisure and hospitality, the service sector more broadly. So let's just leave leisure and hospitality aside for the moment and look at everybody else. And in general, when we do that, you can see that we're within about 2.5% of our pre-recession employment levels. So again, really approaching full recovery. Most industry sectors are very close to those levels that they were at before the pandemic began. So very strong recovery that we have seen. However, if we look at leisure and hospitality, which of course is a very significant component of our economy, the story looks very different. Employment levels still down about 14% compared to where they were a year ago, back in February 2020. So a very dichotomous recovery that we're seeing in South Carolina. And that also points to recovery in 2021 as basically being about the recovery of the leisure and hospitality sector. So when you think about South Carolina's economy continuing to recover, basically that means recovery of leisure and hospitality, because most other industry sectors have either fully recovered or either have come close to full recovery in terms of overall employment levels that we have seen. And so what does that mean for different regions of the state? Well, simply it means that if you look at areas that have a higher concentration of leisure and hospitality as a percentage of their economy, of their local economy, then you would expect different levels of recovery at different rates. And so we can see here, if we look at 3 different coastal regions within South Carolina and compare South Carolina to Beaufort County, to Horry County, and to Charleston County, obviously leisure and hospitality is a much larger segment of these 3 counties as opposed to South Carolina as a whole. So about 28% for Beaufort, 32% for Horry, and about 19% for Charleston, compared to 15% for South Carolina as a whole. And notice also that Charleston is really the outlier here. And that's simply because Charleston is a larger economy as a whole, and a more diversified economy. So a lot of professional services, healthcare, advanced manufacturing, and others. So while tourism and leisure and hospitality are both important to Charleston's economy, because it is more diversified, you don't see quite as much of a concentration as you do in Horry County and in Beaufort. But of course, this means that areas in South Carolina that have a higher concentration of leisure and hospitality, more likely to have been harder hit. And that's exactly what we see. So we can actually track the recovery in South Carolina at the county level. And just to give you a picture here of what that progress has looked like, so we can actually track these unemployment distribution, or the unemployment distribution at the county level across South Carolina from February of 2020 to February of 2021, which is the latest month that we have data available as of today, as of April 1st. And so what you'll notice here is that if you look at the left side of your screen and the right side of your screen, compare February 2020 to 2021, this map of South Carolina doesn't look all that different, right? So for the most part, the employment distribution is approximately the same. So the dark blue counties here represent the 50%, the 23 counties in South Carolina with the highest unemployment rates. And they're essentially the same in February 2020 and 2021. So if you left Earth in 2020 in February and came back in February 2021, at least the distribution of unemployment would look very, very similar. Not a whole lot had changed there. But of course, April, you see a major shift in unemployment patterns, and I can highlight the areas where we've seen the most change. Of course, in coastal South Carolina, due to the high unemployment in leisure and hospitality, but also in the upstate region as well, because manufacturing was the second hardest hit industry in South Carolina. Leisure and hospitality was number 1, manufacturing number 2, and then healthcare related services actually was the third hardest hit, because there were a lot of non-emergency healthcare services that were able to be postponed. So if you think about dentist visits and physical therapy, regular doctor's appointments, so things that are important but can be postponed. So that was happening a lot back in the spring and summer of last year as well. So very clearly, you can see the changes in the unemployment patterns in South Carolina, and they fit they correlate very strongly to the industry concentrations that each region has. And of course, in Beaufort, you can see the high level of unemployment back in April, which has since recovered largely as of February of 2021. And we can also track unemployment rates at the state level. Again, just to track this progress that we've seen over the last year. South Carolina peaked at 11.5% unemployment back in April. That was coming off of historic lows for our state of 2.6% back in January. And you can see that unemployment has basically ticked downwards fairly steadily to its current value of 5.2% as of February of 2021. So a fairly steady decline at the state level, even though it varies significantly by region. And one other way that we can see this in terms of looking at what's been happening in Beaufort is to look at the unemployment rates themselves and track them over time, again, for the coastal region of South Carolina, focusing on Beaufort, Horry, and Charleston counties. And what is interesting here is that you see that Beaufort has actually been doing relatively well compared to other coastal markets, other coastal regions of South Carolina. We saw in the previous slides how both Charleston and Beaufort had recovered far more so than Horry County. But here we can see that Beaufort County has actually done the best of the three overall, and done considerably better than South Carolina as a whole. And so the question is why? What is the reason for that? Well, there are many reasons why this is the case, but one key factor here is the fact that in Beaufort County, as a relative share of the economy, leisure and hospitality is not quite as driven by tourism as we're seeing in Charleston, especially in Horry County, because the residents of Beaufort tend to be older. They tend to be permanent residents, and so they're relying on these services in ways that are more permanent than what we would see in terms of being disrupted by tourism, especially in response to the pandemic. So leisure and hospitality, the industry still being hard hit across the state, including in Beaufort, but not quite to the extent of some of these other coastal counties, simply because of the percentage of that derives directly from tourism. And then one other point here, looking at these unemployment rates, overall, they look strong, whether we're looking at South Carolina or Beaufort County or Horry or Charleston. But I would also suggest to you that these are somewhat misleading in terms of how low they are, because we still have a lot of people who have dropped out of the labor force in the last year and aren't looking for work, mainly because of concerns over safety, because of COVID, not comfortable going back into the workforce. And then in some cases, because especially in the leisure and hospitality sector, the significant stimulus payments that have been sent out as part of the stimulus package, the stimulus checks, I should say, along with the unemployment benefits that many are receiving, is competing with the wages that they would be receiving in the market. So that's deterring some individuals from re-entering the labor force as well. So even though the unemployment rates look good, and they are good, they can be somewhat misleading because of the depressed labor force right now in terms of its overall size. So that gives us a sense of what's going on locally in South Carolina and in Beaufort. But it's also important to look at what's happening nationally. And what we see nationally is a very similar picture in terms of this dichotomy of the economic recovery. So in South Carolina and in Beaufort, we can think about it as really the two sectors of leisure and hospitality, and basically everybody else, right? So that's the dichotomy locally. But we can also look at it from a national perspective, and the same basic dichotomy exists, but we think about it just in terms of the goods market and the services market. So locally, leisure and hospitality and all other; from a national perspective, the services market and the goods market. And so we can really easily see this if we look at U.S. consumer spending patterns, which represents about 70% of our national economy, of our GDP, 70. So it's the single biggest driver of economic growth in the United States. So consumer spending, very important as a metric to track. Here you can see all goods and services. So this is all consumer spending over time. In general, a very steady growth rate historically. So a pretty steady rate, a pretty tight fit if you were to superimpose a trend line here. So if we look at growth overall, over the years, and certainly over the previous decade, it's been fairly consistent in terms of the historical track. You see the major disruption in 2020, of course, and we're getting closer to that pre-recession, that pre-COVID, pre-pandemic historical trend, but still a ways to go there. However, this is very misleading when you look at it just in the aggregate, because if we break out goods and services, just as with locally, we're seeing a dichotomous recovery. This is true at the national level as well. We can start by looking at durable goods spending. And you can see that there's been a major increase in durable goods spending in the last year. We might even call this a durable goods spending bubble, which has significantly increased since the pandemic began. And basically, there are two things going on here that explain this significant increase, which we call the income effect and the substitution effect. So the substitution effect just means that more people, because they can't spend their money on services because the economy has largely been shut down in that area, they're spending that money instead on durable goods. And durable goods are things like vehicles and refrigerators and exercise equipment and dishwashers. And these are dollars that are being spent in this area because they can't be spent on services. The other reason, the income effect, has to do with the fact that disposable income has actually gone up for Americans in 2020, largely because of the stimulus packages that have passed. And so when people's incomes go up, obviously they're spending more. They're going to spend more generally, and particularly on durable goods, since they can't spend as much on services. So two reasons here: the income effect and the substitution effect driving this very strong uptick in durable goods spending. We can look at non-durable goods as well. No real uptick here, but we have seen durable goods spending go back to its historical trend. Again, fully recovered from the losses from the pandemic back in March and April from the shutdown. And the main reason why we don't see a bubble here is simply the nature of the goods that we're talking about, how they're classified. So non-durable goods are things that you typically don't see people buy more of simply because they have an increase in their income. So this would be things like dishwasher liquid, or food, or paper products, toilet paper, paper towels, etc. Things that you really don't spend, you don't necessarily buy more of it just because you have more money coming in, as opposed to durable goods. So basically the way these goods are classified is why we see that difference there. And this is very positive news for South Carolina, where we see this increase in spending on goods. It's certainly good for the port, where they have seen basically full recovery from their losses in earlier 2020, looking at their export and their import container volume. So again, great news for South Carolina. The port is a major driver for our state. And in fact, preliminary data suggests that March of 2021 might be one of their highest months ever in their history in terms of shipped container volume. So we'll see what that looks like, how that plays out. But the port has recovered very, very well and very nicely. And then we can contrast this, of course, with U.S. consumer spending on services. So a very, very different picture. Again, very steady increases historically, a very tight fit there for a trend line if you were to place one on there. But obviously not a whole lot of recovery here in recent months. So this is the sector of the economy that really is still struggling. And again, in South Carolina, that manifests itself when we look at the leisure and hospitality data. So a very dichotomous recovery at the national level and in terms of what we're seeing here in South Carolina. So that's looking backwards. And now we want to turn and look ahead a little bit. We've assessed what's been happening over the last year at the state level, at the local level, and at the national level, and where we are in April of 2021. But now we want to look ahead to the summer and look at what the outlook will be heading into the rest of this year and into early 2022. And as I mentioned before, we're actually very optimistic right now in terms of economic recovery. And as you see in this slide, I kind of give away the punchline here. There may be some light at the end of the tunnel. So we're excited to be able to share that news. Certainly a more optimistic forecast than we had, let's say, 6 to 9 months ago. But there's been a lot of uncertainty, basically because of the vaccine. And one of the things that I like to say is that this economic recession and recovery is very unique from anything we've seen before, because it depends on biology as much or more than it depends on economics, on the economic realities of today. Because as we look towards recovery, especially in leisure and hospitality, that depends on consumer confidence, which in turn depends on safety and on that vaccine rollout. So the vaccine rollout and the timing of that is really what's going to drive the recovery of the service sector and of leisure and hospitality in South Carolina as we move through the rest of 2021. Now, the good news on that front is that we are getting these biological booster shots, the vaccine now available. So I call these biological and economic booster shots that we're receiving simultaneously. So obviously great news for South Carolina in that we're moving ahead on the vaccine. Vaccines this week are now available for all adult South Carolinians. So that's continuing to progress. And on the economic side, we're also seeing this 1.9 trillion fiscal stimulus package that everybody is familiar with. That, of course, is somewhat controversial for a number of reasons. I'm going to talk a little bit about that and come back to it in a moment. But in the short run, that is providing additional resources in terms of helping businesses and providing additional unemployment benefits for South Carolinians who are out of work. And those are dollars that are going to be spent in the local economy and help serve as a bridge from where we are today until we see this vaccine more widely distributed. And in terms of where we are now, in terms of unemployment, this is the best real-time data that we actually have available. These are unemployment insurance claims data. The left side of your screen is initial claims, the right side continued claims. So initial claims data reflect, basically is our best indication of newly laid off workers in South Carolina, because the initial claimants are people that are filing for unemployment for the first time, right? So they typically reflect the newly unemployed. So it's a good representation of layoffs. Continued claims, by contrast, represent the total number of people claiming overall. So those are people that are claiming, whether it's the second time or the 10th time or however long. So it's more of an aggregate picture of how the unemployment picture is changing in South Carolina. And unemployment insurance claims data come out on a weekly basis. So it's a much more real-time metric for what's happening here locally. So for the initial layoff activity, you can see that, of course, that peaked back in March and April of last year. It's come down significantly. And now it's about 1.5 times. Layoff activity today is about 1.5 times as high as it was back in February of 2020. So still elevated. We're still seeing some layoffs, primarily in the service sector where companies are still struggling. But you can see it's much lower and much closer to pre-COVID levels, which is positive. Continued claims, on the other hand, remain high. So they're still about 9 times as high as their pre-recession levels. Again, this points to the fact that the labor force has contracted significantly in the last year, both because of changing financial incentives and because of concerns over going back into the labor market for safety reasons until the vaccine is more widely distributed. So a very current picture here of what's going on overall in terms of the labor market. And then, of course, as we do see the vaccine rolled out, that's going to help us with consumer confidence, which is going to drive more spending, people going on vacations, going out to eat and so forth. Consumer confidence is coming back, but still well below where it was this time last year. So this is another metric that we are tracking very carefully. The good news here is that if we look at spending data among the older population, people who have already been vaccinated, there is evidence now coming in that they are spending more on services. They are booking trips. They are beginning to go out to eat. They are looking to travel and do things. So I think we're beginning to see the evidence that as more and more people are vaccinated, there is this pent-up demand for services and for the leisure and hospitality sector. So that's going to be very positive going into the summer. And then we can specifically look at some possible economic recovery scenarios for South Carolina, just to give you a sense of the timing that we're looking at for this as a whole. So one of the things that we can consider is when we're looking at economic recovery in South Carolina, how do we define that? What does that really mean? And I would suggest to you that one way to think about that is to just think about it from an employment perspective. When can we reasonably expect to have recovered either all or virtually all of the jobs that were lost back in February, or rather back in March, April of last year, that 308,000 jobs in South Carolina? And so if we look at that and consider what the pace of recovery has looked like so far and what we anticipate going forwards, I have two projections here that are more of an optimistic and a pessimistic scenario, again, to provide a sense of what generally we can expect in terms of full recovery of those jobs. So our optimistic scenario, as you see here, is the basically later this year, the third quarter of 2021. The more pessimistic scenario would be the second quarter of 2022. But basically, that's a function of biology, of how fast the vaccine is rolled out. I think the best case scenario for South Carolina would be a situation in which the vaccine rapidly gets to most South Carolinians. Most South Carolinians become vaccinated, let's say before Memorial Day, before tourism season really ramps up. And that could mean a very, very strong season for leisure and hospitality and the service sector more generally. And I think that's realistic. That could happen. So of course we'll have to wait and see. But I think that's really the best case scenario for South Carolina at this point. So full employment recovery for our state is definitely possible in 2021. So a final few comments I want to make then are about the risks as we move ahead, because this, of course, is an important point that we hear a lot about. What about inflation, and will our economy likely overheat as a result of all of the stimulus money that's coming into the economy this year? The $900 billion stimulus package from back in December, being followed by the $1.9 trillion stimulus package that was just recently passed. And one way to look at this is to consider the difference between actual and potential GDP and to compare the two. So actual GDP, of course, is just the measure of overall economic activity in the United States, what it actually is, which you can see here in red. And in green is a measure of potential GDP. And that's the fastest that the US economy, the fastest rate that the US economy can reasonably grow over the long run, given the constraints that it has. So if we're at full employment, if all of our resources are being used to their maximum capacity, both labor and capital, then this is where we're likely to see the economy grow, and at what rate. And if we ever do get over this potential level of GDP for any significant period of time, that is where we run into concerns about inflation and about rising price levels, because it's not sustainable. It typically does lead to higher price levels overall, which erodes purchasing power on the part of the consumer. And so it's important to compare actual versus potential. Now, currently, as you see here, we're significantly below potential GDP as a whole. And so that's where you tend to see the arguments in favor of stimulus to help get us back to our potential. However, looking at the relative size is also important. So this graph here really illustrates the size of the current stimulus packages relative to the difference between actual and potential GDP. So the blue line there just represents that difference. So where it's below the black line, basically that means that that actual GDP is below potential. If it's above, the reverse is true. So anytime that blue line is above zero is where we run into the risks of inflation. And so in 2008, coming out of the financial crisis and the $700 billion stimulus package as part of the TARP bailouts. And notice that, hopefully you can see my mouse here, that the level of the spend, if you make it negative here, it wouldn't quite get to the level of the difference there between actual and potential GDP. So even if all of these dollars were spent, they likely would not have been able to make up that entire gap. So while inflation was still a risk for other reasons, not necessarily because of the size of the stimulus. But you see a very different picture if we look at what's been happening recently. So if we look at $2.8 trillion worth of stimulus, comparing, again, adding together the 1.9 and the $900 billion stimulus package from late last year, again, these data go through the fourth quarter of 2020, so it wouldn't take into account either stimulus. You can see that it's going to put us above that potential to the extent that most of it is spent in the economy. And so again, that puts us at risk for inflation. And that's why you see a lot of debate among economists about whether or not this is going to be a problem going forward. Now, I will suggest that if we do see excessive inflation, it would likely manifest itself either in late 2021 or in 2022. But the way to see that, as we look to track that, to see whether or not it is a challenge, is to look at the measure of inflation known as core inflation. And this is very important, because if you look at inflation as a whole, it tends to be very, very volatile, because especially when we look at commodity prices, things like food and energy, they tend to swing wildly, particularly during the early part of any economic recovery. And I can show you an example of that here. If we just look at the global price index for all commodities, just look how it swings all over the place constantly, right? So this is factored into inflation. And so in a period of early economic recovery, we may see very high levels of price fluctuations or increases, particularly in commodities, that can bring inflation up significantly. However, if we look at the core inflation, taking out food and energy, basically this orange line that you see, this is the measure of inflation that the Fed uses and the one that's the most important to track when we're trying to assess whether or not excessive inflation is happening, again, later this year or in 2022. And just compare the blue line, which is all goods, looking at inflation across all goods, to the orange line. So for example, in 2010 and 2011, we saw periods where overall inflation got close to 4%, but core inflation never significantly exceeded 2%. So this orange line is really what we're looking at to monitor in terms of assessing whether or not inflation is becoming a problem as we head into late 2021 and into 2022. Again, because these commodities change very rapidly in terms of their overall price levels. So wrapping up then, as we look ahead to the second half of 2021, we are, I would say, cautiously optimistic that we're going to continue to see strong growth. I think it's very clear that as the vaccine continues to roll out, we're going to see a strong rebound of the leisure and hospitality sector, which will affect all of South Carolina and help us get back to those full employment levels and recover all the jobs that we lost. So 2021 likely to be a good year for South Carolina and for the U.S. The biggest risk factor right now is inflation, and there is, again, debate about that in terms of whether that will become a problem. And again, I think if it does, we're likely to begin to see that in late 2021 or 2022. But I caution you to make sure that you're looking at measures of core inflation as the real benchmark to measure whether or not inflation is becoming a problem. That's what the Fed uses when they're looking at their inflation thresholds. And that's what we look at as well to assess the health of inflation and the health of the overall economy. And remember that inflation isn't that's a problem. So we're definitely going to see some inflation, particularly in the demand is bid up. But it's excessive inflation, not inflation in and of itself, that's a problem. So I will stop there. Thank you very much for your attention this morning, and I'll be happy to take any questions that anyone has at this time. And Bob, I guess I'll turn it back over to you in the meantime.
I'll jump in, Joey. Thank you so much for your presentation. It's certainly helpful to get a view of what's going on throughout the economy. We do have time for some questions, so I'll invite those one of two ways. You can either submit your question via the Q&A function on the webinar platform, and we'll read them out and get them answered. Or if you'd like to speak live, we'll be happy to unmute you. Just raise your hand, send us a chat so we know to unmute you, and we'll be glad to do that. We do have a couple of questions in. The first one, Dr. Von Nessen, is on wages, and when adjusted for inflation before and during the pandemic, what are the data showing on wages?
Yeah, so that's a great question. So wages have remained fairly stable. And in fact, when we look at income levels, they've actually been, so we have to look at income levels and wage levels. Income levels have actually been up, and average wage levels have been up as well. But that is because we've seen most of the unemployment in lower wage jobs. So the leisure and hospitality sector, for example. And one way that that's manifested itself is in the housing market. So one of the puzzles that we've been looking at is, well, how could it possibly be the case that even last summer, the housing market was already was booming, even though we saw very high levels of unemployment, double-digit unemployment in some markets. And the reason was that much of that unemployment was among lower wage workers that are typically in the rental market, not necessarily home buyers. And so that made a difference. And it also made a difference in average wage levels as a whole. So basically you had this very high level of employment in certain sectors that were typically more low wage jobs. But for people that stayed employed, wage growth was fairly comparable to what we have seen in recent years. But again, it goes back to the dichotomous nature of this recovery. The other element when we talk about income levels is savings rates, which have been very, very high in 2020, over 20%. That's that's more than 3 times the normal savings rate in the US, which is 6%. So a very different financial picture for Americans in 2020.
It's kind of an analogous question. The measure of core inflation, does that overlook the impact on lower income populations? Since one can delay durable goods purchases, but gas and food and other items are consistent needs.
Yes, well, it certainly can. It's important to look at, and that's why you have these different measures of inflation, so that you can look at different markets and which populations are being affected the most, because that's exactly right. But when we're looking at inflation overall, in the example I was providing, it was more looking at it from the context of, are we overheating the economy to the extent that we're having to look at in 2022 ways of slowing things back down, for example, raising interest rates, which could then kind of put the brakes on the recovery and potentially move us back into a recession if we're not careful. So that's the perspective of looking at core inflation. But yes, I think as we move into the summer, it's likely that we're going to see a spike in demand for certainly for fuel as we see travel resume, and that's going to affect everyone. And as we see an increase demand, that's, in the service sector, there's certainly going to be inflation that we're all going to see, I think, in the coming months.
Thank you. And both of those questions were from Carlton Dallas, who's a member of the Military Enhancement Committee representing the Greater Island Council. Thank you, Mr. Dallas. A related question to the point about increased demand for travel. A question on vaccine passports and the impact on international travel. Any sense of the timeline and what that may do for demand for international travel, those vaccine passports?
Yeah, that's a great question. I don't really have a good answer for that. I don't know what that landscape looks like right now. All we know for certain is that based on the limited that are currently available, that there is a significant pent-up demand for travel that I mentioned before, because we are seeing a steady uptick in travel plans or travel spending, I should say, among the vaccinated older population. So I think airlines and others are going to have to deal with this challenge. Are they going to require proof of vaccination? What does that look like? How is that actually implemented? So these are questions that are going to be, I think, that are going to have to be resolved, and we're going to hear more and more discussions about that in the coming months. But all we know for certain right now in terms of the data is that there is a pent-up demand that we are now seeing evidence for in terms of spending activity.
A smart question in from Dale, a frequent collaborator of ours over at the United Way of the Low Country. He mentions that in a prior presentation, you cited bankruptcy rates of business as one of the key factors to look for when assessing economic recovery. Have we seen those large spike in bankruptcies, or by and large have small businesses been able to weather this storm?
Yes, so great question. We have not seen the spike that we were concerned about, the level of increase, and part of that had to do with the PPP funding that was able to provide that bridge for a lot of small businesses. We did see an uptick in bankruptcies, but not to the level that again we really feared, and that's been very positive, and I think that's one of the reasons why we're now seeing faster recovery this year and why things are beginning to open up quicker. There were certainly more bankruptcies in leisure and hospitality in the service sector. There have been a lot of I think, restaurants, just anecdotally, certainly in Columbia, but I think around the state that have closed, long established businesses that haven't been able to survive. But for the most part, the bankruptcy rates have actually been pretty encouraging, given what the alternatives may have been.
We'll take one more question in this segment, and then we will have some additional Q&A opportunity. This one comes in from Josh Ward, who's a great chamber ambassador over with Weichert Realtors. I think an important one for everybody in the real estate sector. We've seen amazing appreciation in real estate purchases in South Carolina. Any trends related to increased traffic from out-of-state purchasers? Do you expect this trend to grow, or are we going to see leveling off as more inventory comes on the market? We all think, many on this call understand how tight the current real estate market is in both Beaufort region and across the county.
Yeah, so I do think we will see more inventory come on the market as people are more likely to put their homes up for sale. I think we've seen evidence that people have been more reluctant to sell throughout the pandemic, which has had this cumulative effect of lowering supply. However, there is such a deficit of supply right now. I don't see that change is necessarily going to make a meaningful difference in price appreciation. I think the low supply is likely to drive this price appreciation for the foreseeable future, certainly through the summer months of 2021. And that's going to be aided by migration patterns as well. And that's something we'll talk about when we come back with the dashboard. But one of the trends in Beaufort that Beaufort's able to take advantage of is the fact that in-migration to South Carolina and coastal South Carolina has been strong. It's likely to continue to be strong, and it has been increased or accelerated as a result of the pandemic. So we're seeing more potential out-of-state buyers. We're seeing more buyers that are looking for home offices, looking to basically looking for new floor plans. And that, coupled with the limited supply, is going to propel these prices higher. I don't know that we're going to be able to keep up in terms of sales records themselves, because at some point, even if you have high demand, if you don't have the supply there and you can't meet it, sales activity can't just keep necessarily going up. So I think we could see a situation, and some markets are already seeing this, where sales activity is actually leveling off somewhat, but house price appreciation isn't. And I think at least through 2021, through the peak sales months, that's likely to continue.
Hey, I'm going to go back on my prior statement saying that was going to be the last question. We've got so many good ones coming in. We do want to make sure we have enough time to hit this important regional dashboard presentation that I think will be value to everybody on the call. But a couple of just real quick questions, if we can get short answers to them. One, we mentioned the ports and their volume. Any early thoughts on impact from the Suez Canal blockage? Is that a blip, or is that something that could show up for a while in our supply chain?
Basically, that's a blip. That was clearly a problem, but fortunately, that was taken care of relatively quickly. And that, I think, especially for South Carolina, more of our port traffic comes through the Panama Canal relative to the Suez Canal. So I'd say it's a blip, not likely to be a long-run disruption.
Another interesting one here, quantitative easing and the commodity inflation. Will that adversely affect Beaufort County, given our focus on restaurants, hospitality, tourism, and that folks might need to spend more money?
Well, I think in Beaufort's going to see the benefits, I think, of in-migration and the benefits of lower costs of living, again, compared to national averages. And so I think on par, Beaufort is going to see more advantages than disadvantages going forward based on the current economic climate. So yes, that can create a challenge, but I think overall, Beaufort's looking to grow at a stronger rate relative to state averages for certainly for the foreseeable future.
And we'll actually make this one the true last one. Stimulus. Do you see need?
Do I see need?
Additional need, or are we? Is it propped up enough? Where are we at?
So I think we're at the point now where we do need to start having more discussions about the long run implications of stimulus in terms of the implications for debt. I think in terms of getting back to pre-COVID levels of economic activity, certainly with this $1.9 trillion stimulus, I think that gets us where we need to be. The infrastructure package being considered now, I think, is for different reasons. I don't think that's necessary for recovery. So yes, I think, as we move into the summers, we see the vaccine rollout. I don't see us needing more stimulus to get us back to full recovery.
Joey, thank you. Take just a quick minute off. We're going to turn and transition to the presentation of our regional dashboard and a brand new report we're excited to roll out. And to help kick that off, Mark Cutler with BB&T SunTrust, now Truist Bank. They came on as a supporter for this project to help make sure we could make this data available to everybody in the region. Mark, would you give us a quick intro and tell us about everything going on at SunTrust Truist?
Thank you, Ian. Dr. Joey, thank you for that excellent presentation on the economic forecast. We certainly look forward to the regional dashboard presentation following my brief comments. But I first want to thank Ian, his entire staff, his entire team. I know they have worked extremely hard pulling this conference together. Steve, our mayor, Stephen Murray, I want to thank you and all those elected officials on the conference. Also want to briefly thank Mark Latanzio. He's our market president, who's so supportive, gladly supported this conference, and he understands the value of strong economics. And so thank you, Mark, for your participation in here. And to all the sponsors and the business community, educational community, all those who are on the call, thank you for being a part of this and making this event happen. Before we get started in any more presentations, I would like to take just a moment to welcome a new member of our team to the Truist family in the Lowlands market, and his name is Quinn Baldry. So Quinn will be joining us here in the market president for the Lowlands. And Quinn started his career in commercial insurance and then in corporate accounting in the hospitality industry. So he'll fit well here in the Beaufort market. Quinn Baldry has 17 years in commercial banking, primarily right here in the Lowlands. He's also a graduate of Georgia Southern University and has been really dedicated to building the communities in which we live. So Quinn, we're really excited to have you part of the Lowlands team, and I know you'll continue to journey to help inspire and build better lives and communities here in the Lowlands area. So I'm really super honored to talk a little bit about Truist and what a great company that I work for. Our purpose is to inspire and build better lives and communities. And we do that many different ways that show up in all of our local communities around the BB&T Now Truist or SunTrust Now Truist platforms. So one of the things I would like to briefly talk about is our Lighthouse Project. This is a long-standing heritage with BB&T Now Truist that really allows our teammates to work together in partnerships with local nonprofit organizations on projects to help create meaningful and impactful communities. Since 2009, BB&T Now Truist teammates have completed more than 12,000 community service projects, serving more than 700,000 volunteer hours and impacting the lives of more than 18 million people. Another way in which we give back to the communities are through our PPP efforts. Of course, to many of our business owners and those who are affiliated with the business community, you know how important this is. And I'm proud to announce that as of March the 28th, new data that has come out, Truist is the number 4 producer of PPP loans. Over 110,000 loans have been approved with a net dollar of almost $15 billion in PPP funding. And that is a testament of all of the hard work that goes on behind the scenes to help our business communities thrive. So I'm really excited about that. Of course, we're a strong strong commitment to the United Way. We gave the Charleston market and the Lowlands market have contributed over 34,000 last year in United Way contributions, financial literacy programs. So we at Truist, we are clearly doing our part to help build better lives in communities, to be an inspiration to those in our communities. So we're really glad to be an integral part of this conference. And we're excited about what the future brings and the optimism that Dr. Von Nessen has already talked about this morning, moving into the 3rd and 4th quarter of this year and into 2022. So at this point, I would like to have Dr. Van Nessen come back and deal with the the regional prosperity dashboard. And so join me in welcoming Dr. Joey Van Nessen back to the group to discuss the regional prosperity dashboard. Thank you.
All right, well, thank you. And I think as we look ahead, we're kind of pivoting now and looking more at the long run. And as I mentioned before, we can look at a short run focus for what's happening now, what we expect for the rest of 2021 and into 2022, but it's also important to step back and think more strategically about where does Beaufort need to go over the next decade. And the goal of this dashboard and this economic analysis was really to set the stage and to assess the economic landscape, the evolution of the market over the last decade, and to provide actionable information for Beaufort to set goals and then to create strategies to proactively achieve those goals, especially with respect to economic development. So that's really the purpose here of the dashboard, thinking more long-term as opposed to the short-run outlook that we just went through together. So here's an overview of the dashboard, which you can see here. And I'm clearly not going to go through the whole thing. We don't have time to do that this morning, but I'm just going to give you some highlights just to share with you some of the basic findings and set up a broader discussion to have going forward. Very quickly, I also want to thank this morning for allowing us to put together this report. Of course, the Chamber of Commerce and also BB&T, SunTrust, now Truist as well. So we're very thankful and appreciative for those partnerships. So as I mentioned, the primary goals, again, of this dashboard and analysis, we want to assess the current state of the Beaufort region, again, what has changed over the last decade, and then use the data to provide actionable information to set these goals going forward and to be proactive about economic development opportunities and taking advantage of the competitive strengths that Beaufort has to offer. Now, in this dashboard and analysis, we had a very specific definition of Beaufort that we wanted to utilize to make sure that we're capturing the region that the Chamber is most focused on. And there are 4 what we call CCDs, or Census County Divisions, that we wanted to look at. And you can see those 4 are delineated here. Most of this is comprised of Beaufort County, or I should say most of the CCDs are included in Beaufort County, though not exclusively. But these are the regions that we wanted to look at. And these are just regions as defined, again, by the census. So it allows us to look at census data as our primary source for assessing the current economic landscape. And a couple of trends very clearly emerge when we look backwards and when we look forwards. So starting by looking backwards, employment growth in South Carolina has far exceeded that of the US over the previous decade. That's very clear when we look at economic trends and compare census data in 2010 to 2019. Here's one graph from the report. These are all, by the way, graphs that are included in the report, so you can look at them in more detail. I'm going to go through them fairly quickly right now. But you can see how South Carolina has clearly outpaced the US in terms of overall economic growth and employment growth over the past decade. And Beaufort, again, defined by this 4 CCD region, has outpaced South Carolina significantly as well. So total employment growth over the last decade, 18.2% for Beaufort, about 13.6% for South Carolina, about 9.2% for the US. So South Carolina doing better than the US, and Beaufort consistently doing better than South Carolina. So that has been a very strong trend for Beaufort over the last decade. And so the question comes in terms of where this growth has originated. Where has the employment originated? And so here we can look at the employment distribution by industrial sector in Beaufort. Again, I'm not going to go through these in detail right at the moment, but just to give you a highlight, to recognize that over half of the employment concentration is within education and healthcare, retail trade, and leisure and hospitality. So this is where the bulk of the growth that we have seen come over the last decade. This is where the bulk of the current employment levels are at. And in general, what this shows is that the bulk of the employment gains are coming from relatively lower wage sectors. Leisure and hospitality and retail trade, of course, but also to a certain extent, education and healthcare. So education and healthcare are very divided. So you see a lot of high wage as well as low wage positions there. So the average wage for education and healthcare is actually in line with the state average, because in addition to full-time and high-skilled employees requiring a lot of advanced education, you also have lower wage workers, such as part-time teaching assistants, for example, or home healthcare aides that typically don't see the wage levels that we associate with other occupations within those two sectors. So it's very divided. So as a result, if we look at the financial comparisons in Beaufort, what we find is that personal earnings in the Beaufort region are about 10% less than the state average, but household income is about 3% higher than the state average. So we have these industry sectors that are leading the growth that are typically lower wage, that are producing lower wage employment overall, but the income levels are still higher in Beaufort relative to the state average. And so the question is, well, how is that possible? What's going on here? Where's that discrepancy coming from? And part of the reason is the fact that in Beaufort, we have a much older population and a retired population that largely are moving in and have moved in the last decade that have these higher incomes because they're coming from non-labor income sources. So things like Social Security or investment income and so forth. So that's a very important distinction to make, because Beaufort is really the only coastal region of South Carolina that has that very strong dichotomy between relatively high household income levels, yet employment growth is driven by more lower wage industries relative to the state average. And we can see some evidence for this if we look, for example, at labor force participation rates. So again, let's forget about COVID for the moment and think more broadly over the last decade, not the last 12 months. So since 2010. And we've seen a major decline in labor force participation rates in Beaufort relative to South Carolina and relative to the US. And one of the reasons for that is because of the in-migration, which to Beaufort has largely been retirees that have been moving into the area. So even though across the state and across the US, we've seen the baby boomers retire and the United States population as a whole has been aging, but Beaufort has been aging at a faster rate, again, because of the immigration of the retirees, of the older population. So you can see very striking differences here in terms of the changes in labor force participation by region. We can also see the median age across South Carolina that has been going up. We can look at each of the 4 CCDs and notice that 3 out of the 4 have a higher age than South Carolina. Beaufort Port Royal is the clear exception there. And that's because that's where the Marine Corps Recruit Depot and the air station are located. So obviously that's going to tend to skew those population numbers a bit younger. But even there, we're seeing a movement to an older population relative to where it was about 10 years ago in 2010. So trends very clear moving in that direction. So the report expands on that a lot more. So those are just some quick highlights. And then I also want to look forward and just provide some highlights here as well. Things to think about for Beaufort moving ahead. So three primary points here. Number one, opportunities really to take advantage of these southeastern migration patterns that have been leading to faster growth. So there is more of an opportunity for the continued development of the healthcare sector, for example, as we see more retirees moving into the region, more of an opportunity to take advantage of the low cost of living in Beaufort. Again, from South Carolina's perspective, that may not necessarily ring true for everybody, but when we compare Beaufort to other regions of the US, particularly New England, where a bulk of the in-migrants to South Carolina are coming from, Beaufort looks pretty attractive from a cost of living perspective. So how do we think about building on that competitive advantage? Secondly, remote work is becoming more of a professional norm in the post-pandemic economy. And that is very clearly, I think, going to increase Beaufort's desirability among the working population. So think about opportunities for recruiting young people from out of the state, saying, come live in Beaufort, beautiful Beaufort, and all the natural amenities that it offers with a lower cost of living, and work anywhere in the world, right? That is a realistic opportunity, I think, going forward. It's also possible to continue to recruit the young population from elsewhere in South Carolina. Just to give you a quick anecdote, I have a colleague who's been working remotely last year from their home in Spartanburg. They've previously been commuting to Columbia, and they found out now that they're going to be able to work remotely permanently. And so they're looking to now relocate to the beach as a result, because they know they can live anywhere. They want to stay in South Carolina, and they would be a prime target for Beaufort. That would be certainly within the realm of possibilities, because they're looking around the state, because they're not restricted by their employment location. So very much increases Beaufort's desirability among the younger population. And then finally, efforts to focus on sectors that can serve existing industry clusters in South Carolina. So not reinventing the wheel, but assessing the competitive strengths that South Carolina as a whole offers and enhancing that, serving that. And we've heard several of those sectors mentioned already this morning: manufacturing, cybersecurity, and healthcare that I list here. All sectors that South Carolina is doing well with now. What are the opportunities for Beaufort to be able to serve and integrate into those existing clusters, and how can it do that? Particularly because these three sectors provide higher skilled jobs that can raise productivity and wages to increase long-run economic growth rates. So I think a lot of opportunities, a lot of competitive advantages for Beaufort going forward. Here's a quick snapshot that you'll see in the report, the actual dashboard. So these are census statistics that just compare key metrics, as you see here: population, age, race, education, income and earnings, employment. So kind of the main way that we can assess the economic landscape, again, to understand where we are today, to create those goals for where Beaufort needs to go over the next decade. And this also gives us a benchmark to measure success against as we move forward. So I will stop there. Be happy to take any questions that you have about the dashboard and the analysis. Those are just some of the highlights, but I wanted to be able to share with you what the focus of the report is, what its goal is, and how you can begin to use it effectively, again, to set these goals and to be proactive in economic development. So are there any questions I can answer that anybody has on the dashboard or on any of the elements? So a lot of information there, and I know not everybody has had a chance to take a look at, but any questions, be happy to answer those.
Hey, Joey, thank you so much. And for everybody on the call, you're going to get a chance to dig into that report later this afternoon. We'll be emailing that report so you can dig in detail. And I want to reiterate, this is version 1.0 for the Chamber's envisioned dashboard. We have a lot of things we want to track. We wanted to lay down that baseline metric for how our region has been trending over the past decade and try to get that data to look really at the way the Chamber defines our service territory in our area, which is Fripp Island to Yemassee, the whole Highway 21 corridor, including Beaufort, Port Royal, Ladies Island, Burton, Sheldon, and St. Helena. And I think this gives us that opportunity to begin that conversation about our trends, and then to look at things like job growth and the great work being done by the Economic Development Corporation, South Coast Cyber Center on strengthening and diversifying the economy, the Beaufort Digital Corridor. We think this is a foundation that we can build from. Joey, thank you so much for pulling all of this together. We are at our time, so we're going to hold all those questions, send them in. We will get them answered offline. But to bring it on home, the City of Beaufort's been a critical partner over the years, and particularly cooperating with the Chamber this year on everything from opening up parking to opening up outdoor seating for businesses to accommodate during the pandemic. Mayor Stephen Murray, thank you so much for your support of this economic forecast. Would you bring it home for us?
Yeah, good morning, everyone. Thank you, Ian. Happy April. I'm Mayor Stephen Murray, and I'm honored to provide closing remarks today on behalf of Council Members Cromer, Lipsitz, McPhee, Mitchell, City Manager Bill Prokop, and the approximately 180 men and women of the City of Beaufort that I affectionately call Team Beaufort. I want to thank Ian Scott and his folks at the Beaufort Regional Chamber and today's sponsors for producing this valuable event. And I sincerely appreciate each of our attendees for taking the time out of your busy schedules to come here and learn together. I hope you enjoyed Dr. Von Nessen's presentation as much as I did, and I hope we'll extend a virtual applause for him and everything he did for us today. All right, y'all know I like quotes, and one of my favorites is by researcher and data scientist Edward Deming, and he said, "In God we trust, all others must bring data." So I was excited like it was Christmas morning to have the opportunity to hear Dr. Von Nessen share our data with us, because success in our private enterprises and other community organizations like the City of Beaufort increasingly requires our ability to collect, collate, and understand the data around us. You may have noticed that Team Beaufort is increasingly taking a data-driven approach to how we make decisions and deploy public resources. Our strategic plan includes key performance indicators aligned with each goal, and you will soon see an online data dashboard that tracks in real time progress towards these goals. But the city's not alone, and I appreciate the Chamber's new dashboard and hope we will all use it to better understand our successes, our challenges, and our opportunities as a region as we work together in the coming year. Because as Dr. Von Nessen has pointed out, we have some work to do. Speaking of working together, I want to spend a moment talking about strategic partnerships. The World Economic Forum releases a Future of Jobs report every other year that can be found online. And while some of their statistics and industry forecasts may change in their updates, a constant in almost every report is the suggestion that the private sector, education, government, and the nonprofit community must be working hand in hand to move our strategic goals forward. The world's moving faster, our challenges are more complex, and the global competition among almost 7 billion of us humans is accelerating. The 20th century model of living in our silos and protecting our perceived turf is not only antiquated, but a model that will lead to failure. It is incumbent on each of us and our respective organizations to commit to a philosophy of partnership across our region. We're fortunate in that we possess tremendous resources in knowledge capital, physical and financial assets, and networks. Utilized together towards our shared goals, we wield a total force strength of communities much larger in size. The City of Beaufort has taken an active leadership role in cultivating partnerships for the benefit of our people, and we should all be proud of our community's mutual successes. A few examples of our regional success are the Joint Fire Department with our friends and neighbors in the town of Port Royal, where we provide an outstanding ISO 1 level of service, which less than 1% of the approximately 30,000 fire departments across the country attain. We do this to provide excellent service while squeezing every ounce of value out of each tax dollar, and we're able to do that together. Or the Beaufort County Economic Development Corporation, where we attracted $189 million of capital investment, 943 retained in new jobs, and filled 9 vacant industrial buildings north of the Broad in the past 3 years. Finally, I want to mention the South Coast Cyber Center, formed just over a year ago by a broad coalition of community stakeholders. The effort is well underway, constructing a cybersecurity and cyber defense ecosystem, beginning with education that will offer our kids and adults training opportunities at all levels, engaging exiting military to retain them in our region, and working with our partners to grow and attract private sector investment, all in order to strengthen our community through economic opportunity and tax-based diversification. I am convinced that success in the future will require us to create and sustain broad coalitions, and I sincerely ask that we all seek out opportunities and lean in with a cooperative attitude. In closing, I again want to thank the Beaufort Regional Chamber of Commerce and Dr. Van Nessen for providing this opportunity, and each of you for the individual parts you play, continuing to make our home a great place to live and do business. Our challenges around growth management, economic protection and diversification, sea level rise, pandemic recovery, workforce retention and housing, educational achievement and expansion will require committed leadership from all corners of our region. But if this last year is any indicator, it proves that we know how to work together, we know how to accomplish difficult tasks, and we are united in a common vision to protect our people in this remarkable place we call home. I look forward to working alongside many of you on behalf of our city and region as we turn our challenges into opportunity that will benefit future generations, just as our forefathers and foremothers have done for centuries. I'll leave you today with one of my favorite Greek proverbs that I think is especially fitting for the month that hosts Arbor Day. A society grows great when old men plant trees whose shade they know they will never sit under. So I ask each of you, what seeds will we plant together this year? Thank you.
Mayor Murray, thank you. And again, a final thanks to all of the sponsors without whom we would not have put this on. That includes the Beaufort Jasper County Realtors, the City of Beaufort, and Wells Fargo Advisors, who are our presenting sponsors today, and also those forecast sponsors who help supply both data and dollars to help make today happen. The Beaufort County Economic Development Corporation, the Beaufort Digital Corridor, Beaufort Memorial Hospital, the Coppage Law Firm, the Home Builders Association of the Hilton Head area, the Town of Port Royal, Technical College of the Low Country, the South Coast Cyber Center, the Town of Yemassee, and the University of South Carolina, Beaufort. It's a long list of great collaborators. There's a bunch of great questions that have flown in here at the end, all great topics for us to cover in future gatherings, which will soon be in person. So look forward to conversations about the ports and the new Jasper port, about affordable housing, and all the related infrastructure, including broadband, that ties so closely to our success as a region. Thank you all very much, and have a great rest of your April 1st.
Bye, everybody. Have a great day.
Thanks, everyone.